Welcome. There are a couple interesting things going on in the market right now. So I think everybody's seeing that the market's been taking a bit of a dive this morning. What's interesting is we had a really great move going into, actually, it was pretty much solid going into the weekend or Memorial Day weekend. I hope everybody had a great 3-day weekend for that. And then we had a big old pop on Tuesday. And while that might seem really great and exciting, a lot of times what that happens is it's too high. And what happens in this market when it's too high, it gets pushed back down. So we'll dive right into the markets like this. There are a couple things I wanted to show you here. If you come over to profitpilot.com and from the one I printed, so I'm here every Wednesday with you all. And so last Wednesday was the 20th. This came out on the 21st. So I want you all to be able to know about this. I spoke about this plenty to Simpler Trading and to my channel over at Moxie Trader and all that. But I was talking about how, which comes first, the chicken or the egg, and which one comes first, the technicals or the news. And I wrote up some examples here, and then it was funny that I saw that again last week, and on I think it was Thursday or Friday, about something happening with the markets. And then we get this big old pop. I'll show you here in the markets right here. We get this big old pop from the weekend, and this is where I left off my channel. I said, look, we're, number one, opening right up into resistance, which is basically at the daily 200. And actually, let me bring up this one because I wanted you guys to see this as well. Right up here. And you can see for the SPY, we're opening, that put us right at the monthly 10 SMA. And then that also put us at the weekly 50 SMA and even the weekly 30 SMA. And we've just pushed past the weekly 50. So both of these are generally resistance areas that I see typically. And then the other thing I said is, it's great. We have a nice big pop up, but that leaves us unsupported. In fact, you can see like right here on the 15-minute time frame, we've got price was really high off the 15-minute 50. And in this market, what I've been trading lately is essentially the 15-minute time frame, because what happens is we kind of follow the 15-minute 50 up, and then that gets us too far away from support on the hourly chart, and then it comes back down. So I was like, not so great. And I said this kind of builds us some risk to the downside because price is going to want to come down to support, which is the 15-minute 50 in this case. So far, it's been doing exactly that. Even this morning, I look at the pre-market. Just I don't trade with it, but I just look at the pre-market, the overnight. And I wrote a note to my subscribers, and I said, today's kind of a strange day. The SPY is up, the IWM was up, the Qs were up in the overnight, but then they came right back down and they opened it up where they left off yesterday. And I said, despite all this, I'm really not seeing a ton of things opening up. The only things, and this goes back to the title of today, our sector rotation. The only things I'm really seeing up are really beat up stocks that had room to actually move to the upside. So we're seeing travel, essentially. We're seeing cruise lines. We're seeing airlines. Kind of seeing some trucking companies. Like we're seeing transports. And then we've been seeing, I got a list here. Airlines. And then let's see, financials. We've been seeing a lot of financials been going up. So, and what's been awkward about them is, well, you basically had to be in as of Friday. So we'll kind of go through and dive through some of that stuff. And then they've taken off for 2 days. So I'm an end of day trader. It's made it a little bit challenging. And then as we go through here, we'll talk about this. Going into Friday, I was actually saying, hey, this looks more like a short to me, right in through here. I said price underneath the 15-minute 50 and the Moxie indicator below zero. So typically that's a short. But I said I'm not going to be shorting this market going into a 3-day weekend. Of course not. There's no way I'm going to be doing that. And I did say also that the hourly chart basically looks like it wants to hold right there. The Moxie indicator is above zero. So I said on this time frame, it does still look like it wants to keep going up. The thing that I've been talking about, actually, I'm up here with my family, and my dad, I'm in my dad's office, basically, and so I talked to him, and I said, this looks pretty awkward. Tuesday, so yesterday, since we had a 3-day weekend, Monday off with Memorial Day weekend, I said, this looks pretty awkward. There was no setup here on the 15-minute time frame, and I know maybe some of you guys don't know my, know my style and my system, but basically, we had price continue down like that, and we had the indicator continue down like that. Price was underneath the 15-minute 50, and the Moxie indicator was below zero. There's no setup. So when we got this giant gap up and this move up, it just did it, because like I don't even know what it was doing it for. It just bounced up. There was no technical reason. And I still, right here, price is still not touched the hourly 50 when this thing first started. So I look at this and say, you know, I'm kind of suspicious of this. Now let's go over to, say, let's do IWM up next after that one. All right, so kind of the same thing. This is where when I made my video to the subscribers, I said, this looks really awkward. Yeah, there is a big distance between price and the hourly 50, and we we are starting to chop through the 15-minute 50, and the Moxie indicator has been trending down this whole time. Usually that's not great. So that's why when this move happened and it's just a vertical gap up, well, it doesn't seem very supported. It's going to have to come back down to its support someplace. That first tree branch, I like to kind of call them tree branches, but that first tree branch of support, 15-minute 50. Now the question is this going to be support? How long is it going to hold? I think that's going to be somewhat problematic because here are a couple other metrics that we can use. One, we have higher price. We have a lower indicator, meaning that price went higher on less energy. That's what that's showing. The other thing is we have still not touched the hourly 50. I love my hourly chart, and when I start seeing stuff like this, it's problematic. Anytime price gets too far away from the hourly 50, it usually doesn't hang up there too long. It wants to come back down. The other thing is we are outside of the third ATR on the hourly chart. That's also outer. Those are like outer bounds, outer ranges. Hey, good morning, guys. Sammy, Eric, good to see y'all. Welcome to this crazy market. This is a wild market we're in. Now, what's interesting is I actually just got off the phone this morning with another person who is looking to start trading. They've been trading. They've been having some troubles. And she said, I've been trying to short RH. I've been trying to short Lulu, and it just hasn't been working. And I said, well, you know, I get it. And she's like, well, this doesn't make any sense of why the market is doing what it's doing. I said, I know. I know. The market is not in line with the economy right now. I said, she's like, but I'm a realist. I'm looking at the reality of the situation. I said, yes, you're looking at that reality of the situation. I said, you're missing the other realities of the situation. The other realities of the situation that's going on right now is that the Fed is throwing or printing trillions of dollars. Absolutely printing trillions of dollars. One other thing, I know a lot of you guys are kind of like wonks out there and kind of look at the hardcore technicals of this. What's interesting is, and I've been kind of studying up on this, is that the Fed is not putting money into the market or putting money into the economy by issuing debt, and they're not buying debt. It's not a debt situation. They're doing it by just creating money supply. They're just printing money. So we don't really know what this is going to do. It's generally talked about, okay, inflation is going to be an issue in the future, but we're not buying up debt and we're not issuing debt. So, you know, we talk about we've just printed trillions of dollars and added it to our debt. We haven't exactly added it to our debt. I mean, that was something I was originally thinking too. No, we've created money. We've just created money. We've just created more dollars. So it's an interesting thing. I don't know exactly how it's going to unwind. I don't think a lot of people will do either. Maybe the Fed doesn't either, and that's why they're doing it. So those are all different arguments. But she was saying, well, the reality of the situation with the economy out there. I said, I get it. It's not lined up right now. I said the other reality that you aren't seeing is TD Ameritrade alone has had over 400,000 new brokerage accounts created. So people are working from home. People are starting to trade. We have a lot of new subscribers here. So thank you, everybody who's been subscribing. Appreciate it. We are trying to help make you money. Other people are out there saying, hey, everything I've ever learned about the stock market says when there's a big dip, just buy it because it's likely to come back. And so far, they have not been proven wrong, maybe until soonish. So think about all that new money. I've been hearing reports and articles, and I know people who are like, I just got a stimulus check. I'm either fine, I don't need the money, so where's it going to go? I'm going to go invest it because I don't need the money. And I've also seen other people who are like, hey, I just got some free money. Let's go risk it. Let's go make more money with the free money we just got from the government. And so all this money is also then making its way into the market, which has created this V-shaped bounce that we've been getting so far. And that is where the person who was trying to trade said, this doesn't make sense. Why is Lululemon still going up? Why is it making new highs? And I said, I don't know. Why is Chipotle making new highs during this time. They aren't making more sales than they were before. Yes, maybe they've done very well in pivoting during this time, but they're not making more sales than they were before. So things are screwy. Just keep that in mind. And let's see if we can kind of work with that going forward. Teresa, always good to see you. Yeah, Sean, totally right. That's the favorite quote. The market can remain irrational longer than a trader can remain solvent. Absolutely. And I feel sorry for the correspondence that I was speaking to this morning because she was getting run over. Absolutely, because she was trying to short Lulu. And I said, let's pull up Lulu just so you guys can see what we're talking about. Does that look like a stock that should be shorted? No. Does it make sense? No. Absolutely. You think more people are buying Lululemon right now? I doubt it. I said that there are opportunities to short, but I said this thing has been in an uptrend. And what this really kind of told me and showed me was she didn't have a process. She was just going based on her either feelings or this isn't real. This isn't real. This isn't reality. It shouldn't be up here. So I'm just going to short it because. Well, that's where you get into a problem. And you get into a problem because you don't have a process. And then she also wasn't using stops, and she didn't know when or how to get out. It just kept going. It kept going. It kept going. And now she's down money, and she's like, well, I can't get out now because I'm down so much. I said, it can always keep going up. You can always keep losing money. And then, of course, when you finally throw in the towel, it's probably the worst time, and then it turns around. So just make sure that when you get out, for example, Chewy, I'll even be totally honest. This was my trade of the week. I thought this thing was going to be great and wonderful and the best, and it ran me over this morning. But you know what? I had to stop, and I think something right about there. I think I had my stop right about there. 4.5%. Okay, maybe a little larger on the stop side. I've been having to do that because of this market. I wanted to account for some movement. First thing, I went in this thing yesterday. I told everybody about it. First thing this morning, straight down. That's just trading, okay? And I will admit it for myself too. So and I think that, and when I called her, I said, look, I made a wrong trade on Chewy. That's okay, but I had to stop because look what it did. It got worse. So I'd rather get out soon, hit that stop so I don't have to ride this out. And so I think this is all pretty much a good lesson that, when I talk to people and I talk to traders and subscribers, it reminds me of all the things that I used to do in the past. I'm like, oh yeah, I used to make a lot of mistakes and just be, problematic like that. And so it just helps remind me that I need to communicate that to other traders. Maybe you know it, maybe you don't. It's always good to hear it again. So kind of one more time for anybody who's going to be showing up kind of midway through this, I do like to go back and say, come check out my website, profitpilot.com, profit-pilot.com. And mostly the one that I want to be talking about is this one that I had called the Digital Money Printer, talking about, the chart setup, and then there's news that comes out, and it's kind of funny how they all happen. So that was a very interesting one. And then if anybody is interested in all the other various social medias, you can come and check out. I got Instagram, then got Twitter up here, and we're helping people out. In fact, actually, I had somebody ask me a technical question about the Moxie indicator on there. So it works out pretty nicely. We're going to be posting some links in the chat box with you, and that's how you can find all the stuff. So I've got another write-up that I'm going to be working on today. All right, so that's a lot of stuff that we've been going through. Let me kind of go back to the Qs and talk about what's been happening. Now, for my subscribers, come on computer, there we go. So for my subscribers going into Friday over the weekend, here is what I was talking to them about. I said, number one, we've had a higher price on the Qs. Now, Qs have been leading, but they're also the most susceptible, I think, to when something changes, case in point. And I said, we've had a higher price, and we've been doing it on less and less energy. Have you guys seen this? Even overall, higher price, less and less and less energy. This is this negative divergence that I talk about. This is the Moxie indicator, and this is how I'm able to read and see what's going on with the market. And then I've also been talking about, and this isn't anything special as far as indicators and stuff go, but just the way that the market has been working is that anytime price gets too far away from the hourly 50, it tends to want to come back. We've seen it here. We saw it here. We saw it here. And then we were starting to see it here. And that's where I was like, I'm really looking to try and short this thing, but I don't want to be wrong about that. And going into a 3-day weekend, I don't really want to be shorting it. Not to mention, and I did take a little bit of a swing on it, I think Thursday, I was trying to short this area, essentially. I was trying to buy the UVXY, and it just wouldn't go down. And when it just wouldn't go down like that, you have to kind of think like, okay, what's this market generated information? What is going on? Everything says it should be short. There's still room for price to go down on the hourly chart. Price is underneath the 15-minute 50 on the 15-minute chart. Why won't this thing go down? And when you feel these things, when your spidey senses kind of pick up like that, you got to say, something else is going on. So that's why I was completely flat going into the weekend. My indicators and my rules said I should be going short, but I'm not going to be going short into a weekend, especially one where price does not want to go down. And thank goodness I didn't go short, because on Tuesday, the market opened with a gap up. Now, it didn't hold, and that's the other side of the equation. Because there wasn't a setup, and I was looking for things to kind of go short, this was a very, very unsupported move up. And look, outside of the 3rd ATR, hit the 3rd ATR. It made new highs, but with less energy right there. You can see how close we are to zero, and it's been red the entire time. And look at the 15-minute Moxie indicator. It's been below zero this whole time. So I looked at that and kind of scratched my head and said, this doesn't feel good. So we went in a couple positions, and I wanted to be delicate just to see if things are working. You know, when I see a good trade setup, I got to take it, and then that's why we have our stops. But look at this. Higher high, lower energy. It's been some fun stuff to kind of look at, and then today just bottom fell out. Now let's go look at some financials and show you some of this. This has been the tricky stuff. So what I've been talking about over the last few weeks, maybe just 2 weeks, is when it comes to the small caps and when it comes to really beat up stocks like this, they have not been going down. So this is why we need to be really careful about trying to short the market, because one, Fed trillions dollars, right? And two, stocks just really have not been going down. A lot of these major sectors and indices have just not been going down. And what they've been doing is actually going sideways long enough that they finally got over these moving averages. They finally got over the daily 50. They finally got over generally the hourly 200. And so now these moving averages turned into support, awkwardly enough, really. And going into the weekend here on XLF, and very similar to the airlines and to the cruise lines, they got over the hourly 50, which is good. That's what I like. And the Moxie indicator got above zero. And as of Friday, price basically flagged into an uptrending hourly 50. All that looks pretty good. But again, I didn't really want to go risk something like this that basically has been going sideways for who knows how long on a 3-day weekend. Like just kind of based on rules and kind of your comfort level, I didn't want to be doing anything like that. I also did not see any kind of setup on my 15-minute time frame. This goes back to the Qs and the SPY. I just didn't see any setup, even though the hourly chart was still in an uptrend. Notice that price, we did have a double bottom, but the indicator kept trending down. And then even here, you can see price was still underneath the 15-minute 50, and the Moxie indicator was below zero. I can't take a trade like that. If all I know is price is actually going to continue to get rejected by the 15-minute 50 and go down. So I had to look at that and say, well, can't take a trade. And then when we wake up on Tuesday, we open with this giant gap, and then we get that. Not my kind of trade. There's nothing I can do. So unless you're kind of a day trader, I'm an end of day trader. Jump in and see if this thing continues to float up. It's about all I can offer. Now, that being said, you guys need to be real careful about this, because for as good and as exciting as this is really, really in a very, very much of a predicament. And I'm going to show you IWM so you can see an example of what I'm looking at. Price is so far off, the 15-minute 50 hasn't even touched it. So its closest support, its closest tree branch, not even touching it. Price is running the outside of the 3rd ATR on the 15-minute time frame. That's a lot of energy, but unsustainable. And then price is so high. Look at this thing. It is off the 8 EMA on the hourly chart. It is well outside of the 3rd ATR on the hourly chart, and it is sky high from the hourly 50. Look where price is in relation to the hourly 50. Now, this might push for another day or two. We don't know. It might push for another day or two, but it is way up there. It's gone vertical. And then you can see that we've got a big old gap between price and the 8 EMA, and then we've got price up here at the 3rd ATR on the daily chart. Now let me show you an example of how this might possibly go, because we've seen this before. Russia, yeah, I understand. I'm with you on that. Just be careful because yes, there's news. The coronavirus is getting better. There are fewer issues and deaths and cases. I think this is mostly why a lot of stuff has been getting pushed up like this. But just be careful when in this kind of market. What's been happening is people sell into the good news. When you get a big move like this, the smart traders out there be like, oh, hey, thanks for the money, take it, and they sell it. And the new traders go in there and like, oh my God, this is amazing, it's going to keep going, and they buy it. You need to be in phase with the market, and that's why I'm telling you, when you see something like the cruise lines and the airlines and the financials that are all popping, you should actually kind of like little hair needs to pop up and be like, ugh, this is kind of like, okay, I need to take my money. I don't get in. I need to start taking profits. And let me show you that example. IWM did this a couple weeks ago. And what you'll see is, look, IWM. Now, IWM actually had a little bit better of a setup. You see how it bounced right into the 15-minute 50 right there? You see how the Moxie indicator was angling up and above zero? That's a good trade. That's perfect. I like seeing that. What we had today on these financials and other things, they just popped. But look what happens. Doesn't this look exactly like XLF I just showed you? Price like screaming up along the 15-minute 50, and then look here at the top. It didn't even touch the 15-minute 50. It's outside of the third ATRs. And then what that looked like on the hourly chart. You see how price was outside of the third ATR, and look how high price was from the hourly 50. Looks just like XLF. And then you can see here on the daily, right there on the daily, it's at the third ATR. You see the big old gap between price and the 8 EMA. This thing is in outer space. And what happened? It gapped down, got underneath the 15-minute 50, and then broke down. So this is what I'm saying. You need to be extremely cautious when you see something like this, like when you see the financials. You shouldn't necessarily be excited and get to buy. If you're going to be buying, you better make it quick, because this is unsustainable. I just keep showing you the examples of this, and I say, look for the lower time frame charts, look for whatever. When price gets too far away, people are going to sell into that. Look at let's look at XLF. We did that. How about RCL? We'll do the cruise lines. Now these might continue for a day or two. Who knows? I wouldn't feel comfortable kind of carrying this into the weekend. But look at this stuff. Price has not touched the 15-minute 50 yet on this move. Great. As long as it can stay above the 15-minute 50, fine. That's my first line in the sand. But we got to make sure that it does, and it could also just gap down through it some morning. We don't know. Price is outside of the third ATR on the hourly chart. That's pretty overbought. Look at where price is in relation to the hourly 50. It's a fair distance up there. Price is at the third ATR on the daily chart. That's pretty up there. So, I'm not looking at this kind of stuff saying I'm super excited. I don't want to be buying up there. I'd rather be buying down low, down in here. Now, did I get it? No, because going into a 3-day weekend, didn't know these things were going to bounce like this. No way. So otherwise, I'd have to take these into like a 2-day quick trade. And even at that, you can see what happened. Come on, computer. Look at this morning. Right there. There you go. Opened with a big old gap up. What did it do? Promptly sold into. Now maybe it rebounds a little bit, but people are selling. They're going to take that and say thank you very much. I enjoyed that. All right, then let's look. So CCL, RCL, those are all looking the same. Let's look at AAL. Hey guys, remember, thanks for chatting in here today. I always love hearing from you. Make sure to subscribe. I actually have a couple people asking like, oh, how do I find you? How do I know this thing's going on? Well, when you subscribe or when you hit like, you turn on the alert, you turn on the bell. That way it will, Facebook, YouTube, Periscope will notify you when this is going to be coming up. That way you don't have to think about it, and it'll tell you like, hey, I'm coming on Wednesdays, 10:30 Central in the morning, talking about the market. All right, so airlines, same kind of thing. As it turns out, sorry, I'm on my laptop trying to run a bunch of things. It's always a little bit slow. Oh, let's see. Let's call that good. Okay. So price, as it turns out, did bounce right into the hourly 50. But that was Friday, going into a 3-day weekend. 15-minute did not give me a setup. Price was still underneath the 15-minute 50, and the Moxie indicator was still below zero. So these things just kind of exploded out of nowhere going into the, after the weekend, over the weekend. Again, be careful about these situations. Be careful about these things being way up here. When they get up there, they tend to get sold into. So just be really careful about that. All right, and then the other thing going into about this sector rotation, most of the FANG stocks not doing well. Let's talk about Amazon. I feel like they've kind of had their heyday. Now maybe they'll come back later. I'm sure these things aren't going to be dead, but for now, it's not where the money is. One way to look at this is, in my world, I see that price was too far away from the daily 50. That can't exist for too long. Price likes to follow things like the 50, too far away. It's going to want to come back down and find some support. The other thing, and I've been telling our simpler trading options people, I've been telling my channel, I've been saying, look, this is not right. Price on the hourly chart should not be over the hourly 50 if the Moxie indicator is below 0 the whole time. And I've been warning people about this. I said, this isn't good. The other thing, when I was talking about in the beginning of this session, when price gets too far away from the hourly 50, it comes back. Price gets too far away from the hourly 50, it comes back. And when does that happen? It happens when price breaks the 15-minute 50, right there, just like that. And you can see ever since then, price has been underneath the 15-minute 50. And so far they've been going down. One other interesting thing. I had a couple people scoff at me about this one, but I have to stick true to my indicator and the things that I've learned over time. I said, Microsoft, looks like this is going to go down. Does not look good. I said, look at the distance, once again, between price and the daily 50. A little too much air. Probably wants to come back down there. What does that look like on the hourly chart? Well, here's what I call an inverse trampoline move. Price should not be over the hourly 50 when the Moxie indicator is below 0. I said, it looks to me like this is going to go down at some point. And sure enough, we got price that finally broke and got underneath the 15-minute 50. Hasn't turned around since. It's just been going down. So I talked about this last week with a lot of our options people and said, you better watch out. Let me show you a couple examples of that. So CAG, because the way that I kind of operate when I show people how I trade is I find examples of things that I see, and then I show current things that are starting to develop like that. So Microsoft, it was holding up last week, right? So I said, let me show you some examples of what I foresee Microsoft is going to do and what it's going to look like. CAG was one of those examples. Here is price too far away from the daily 50. What does that look like on the hourly chart? Right here. Here's an inverse trampoline move. Price should not be over the hourly 50 when the Moxie indicator is below 0, and it finally rolled over. And where to go? Right to the daily 50. So that was my signal on the hourly chart. So that was one, CAG. Well, let's see, what was the other one? LLY. LLY. C, I don't know about that. You're asking about 720p resolution. I don't know. Maybe that is YouTube. Maybe that's live. I'm offering the best that I can. All I know is that I am streaming, and I've made my charts bigger. So let me look into that. Thanks for mentioning it. But yeah, we'll see if we can up the, I don't know, if we can up the resolution. So at least it's not on my end. I'm just broadcasting here. So let me look into that. But thanks for letting me know that it's not so great on your end. Maybe it has to do with a live situation. All right, so LLY, same thing as CAG and same thing as Microsoft. Notice price was too far away from the daily 50, unsupported. So what does that look like when it eventually wants to break down and come back down to that? Right here. Price, there's your inverse trampoline move. Price over the hourly 50, Moxie indicator below 0, and then it just started trending down. So very interesting. I'm going to be having a good time in my options room today when I go talk about this and say, hey, guys, last week I showed you LLY and what it did with an inverse trampoline move. I showed you CAG, and then I showed you that it looked like Microsoft was about to do the same thing. So very, very fascinating. That's kind of why I like the market, because it's you see these things, you're like, oh, starting to put the pieces of the puzzle together. So pretty neat. All right, so let me kind of go back over here. If you guys are interested, well, here it is. If you guys are interested in the Moxie indicator, you come over here, simplertrading.com/stocks. I know it says Moxie stock method, but if you just type in simplertrading.com/stocks, that's where you can get the information that I teach, the class, the indicator, all that kind of stuff. so that you can see things like these inverse trampoline moves and know to not be in those particular tickers. And then we come over here to, I got the Facebook and the website. So yeah, we're going to post all these links. Once again, thanks for kind of being out there. Watch out for the